Now, I want to talk to you about the millennials and why this is important. So again, I started to talk to you about trust and how trust outside the U.S. is a huge deal. And I spent some time talking to you about store of value and why that's a huge market. But let me explain to you why I think millennials are the third piece of what's happening. So this is 5 generations of Americans, starting with the greatest generation. They're the people that fought World War II. And then the silent generation, which was really kids born in the Great Depression and saw their parents suffering the Great Depression. Then the boomers, who were the kids of the silent generation. Gen X, which was a small generation that followed the boomers. And then now the millennials, which are the children of Gen X. As you can see, millennials are the single largest population cohort ever in history. It's 96 million people. It's larger than the boomers. So it's not the largest percentage population ever, but it's the largest number of people. And I think the number is actually more important than the percentage. So what's happening with the millennials? Well, this is something that we use in our strategy work, but I think it's relevant today. You know, the average millennial today is 26 and a half years old, which means they're just entering their home purchasing age on average, and they're the earliest ones or the oldest are beginning to enter their prime income years. Now, as you look to the left, you can see that millennials, in fact, had a huge impact on alcohol consumption when they turned 21, right? It's a move away from beer. And they've already had an impact on the auto market, but we're going to start to see them have huge impacts on investment decisions and long-term purchases. Okay, and again, I just want to remind you, 92% of millennials don't trust banks. Okay, well, on slide 23, I'm showing you these millennials are now just starting to become into their 30s, and so they're making enough money to actually start saving and paying off student loans. And what happened when generations hit that age, 25 to 45? Well, on slide 24, I'm showing you that housing starts since 1960 have almost been entirely explained by each generation turning age 25 to 45. So as you can see, housing cycle peaks always coincide with the peak of that specific generation cohort being age 25 to 45. And again, I want to emphasize the millennials are now just entering prime income age here. So what happened when the silent generation hit their prime income years? As you can see, that was starting in the 1970s. These were the children of the Great Depression. So when the dollar went off the gold standard, the silent generation bought gold and caused a massive, massive surge in gold prices. But as you can see, subsequent generations haven't bought gold, although this gold is now being transferred via estates to other generations. And we don't think subsequent generations are going to hold gold. The boomers entered the prime income years starting in 1982. Well, what happened from 82, and that cohort peaked in 99? What happened in those years? The S&P exploded. The biggest bull market in history could easily have been explained by just boomers hitting prime income age. Now, Generation X, which is my generation, wasn't big enough to actually drive the S&P, and you can see that secular bear market in that middle there. But millennials are now prime income years, and they're actually enthusiastic about stocks. So we do think this is bullish for equities, especially growth stocks. Gen X, which was my generation, helped drive a boom in hedge funds. And as you can see, that hedge fund boom essentially is maturing with the Generation X cohort. And as you know, millennials are more interested in ETFs and passive products. So what does this mean for Bitcoin? Well, take a look at this chart. I've overlaid Bitcoin's price to millennials. And as you can see, that hookup in 2016 actually did coincide with the first millennials entering prime income years. So I think that at the end of the day, the easiest explanation for why crypto is going to turbocharge the next 10, 20 years is that millennials are comfortable with digital businesses, and trust is important. And I think a decentralized digital currency is a great way to express trust. And if you sort of follow this chart on a log basis, Bitcoin could be a $10 million token before millennials start to retire. And they're all going to retire because they can buy planets with all that money.